Hello traders, welcome to another daily analysis. Today it's October 26th, Wednesday. So let's just get into it. So again, today was another quiet session. There's not really much economic data. The whole London session, there was no tier 1 data. I'm sorry, this was from yesterday. So the London session was no tier 1 data, and the New York session, the only thing is the new home sale, which was worse than the expected number, and of course the crude oil inventory, which is a draw, but not a big surprise. It doesn't go out of deviations, and as a result, it wasn't a large draw. On top of that, we have another news from OPEC saying that Iraq is actually want to get exemption from oil output, and as their meeting is coming up very soon next month in Vienna. So it's just a lot of uncertainty with oil market, but generally the oil equity market will also down, so it's a risk of sentiment day, and it can contribute to many factors. Of course, it could just be general risk tone, but also because the election is coming out from US, and right now the market is really uncertain to whether which candidate is really gonna win, because no one has a certainty of winning chance right now. It's really divided. So right now it's just sort of uncertain for the whole market or the whole world. Now, a good news coming from Australia. Last night the CPI data was actually positive. It's positively expected, and previous trimming CPI was also in line, and that of course helped the Australian dollar. And another news coming out from Britain is their official David Jones commented that the Brexit has to go through the parliament, which is also, this is not a final ruling from the court. It's just the official keep coming out and comment saying that most likely it has to go through the parliament. Now, if it has to go through the parliament, then it will be more moderate for the decision. It's not gonna be a hard break exit. So it's a good sentiment generally for British pound. And that's it for the news wise, and the fundamental data wise. I know it's very quiet, nothing really significant happened. But just happened day to day. That's just a regular day. And let's get into the chart then. So as you see, I already opened my Euro Aussie chart. Today we have a very large reversal signal. Actually, we went to low as 1.4550, and we actually tried to reach at 1.43. So that's actually quite significant. That's more than average daily range. So there was no significant reason for this rebound. It could be because fundamentally Australian dollar was supported, but and there was no significant news coming from euro, except it's a risk of sentiment day. So maybe that's what happened. We could of course take a look at hourly chart and we'll know what happened. So today, Australian dollar was huge. This candle because of the CPI data. So market was largely positive for the Australian dollar, right? It actually dropped almost 100 pips, more than 100 pips in these hours. And then the rest of the session, which is slowly goes back. So that's why. So for me, it's not really a negative for my trade, because we have a large selling power and a slow bullish power into euro dollar, and that's because the risk of sentiment basically. Plus, there was no significant news or data came out after last Asian session, so that could be the reason. Nevertheless, this trade is already risk free. I could tighten my stop loss here at 1.4350, but most likely I will get stop out tomorrow if I'm tightened this tight. So instead, I do want to just leave it as it for now, and then just give it some time to breathe, right? Because tomorrow, we might be try to go up to 1.43, 1.44 again, but we might fail, and really depend on what happened tomorrow. So for me, I like to give it some time to breathe, and then just still follow my strategy, which is that I move pretty much every 5 to 3 candles. If it is nothing significant, I most likely will move every 5 candles. 5 candles, that's like 5 days, 1 week of trading days. That's what I like to do. So if I move today already, then there's a very high chance this trade is going to be out tomorrow, which is fine. But for me, I'd rather to just give it some room to breathe and just to see what happens. Other than that, let's take a look at 28 pairs to see if we have any available trade. So take about euro dollar, euro pound again, euro Swiss. We're pretty much all in this kind of ranging area. Euro dollar, we're slowly going up. It's not particular any strength or weakness into euro or dollar. It's just a regular profit taking, regular price action. Euro Aussie, Euro CAD. Now Euro CAD has another, significant strength, but don't be surprised to see this is just a short-term retrace. And the reason is because Canadian dollar it still has a better sentiment, a better strength than euro dollar. And right now, all this movement is really around the oil market is going down, and also the OPEC negative news. But still, we are, if you draw like a Fibonacci, maybe here to here, and you see that you are actually still just right at the 50% area, which is a strong resistance, strong support, and also congruent with 200-day EMA. So this is a very strong area at 1.4625. So don't be surprised to see, any strong resistance to push euro dollar down further. Now euro New Zealand, again, ranging bound. Euro yen range area. Let's take a look at British pound. Again, no significant news, but we do have a positive news coming out from pound today. However, again, like I say, right now the market is completely disregard any positive news for British pound, because the market is looking forward to short British pound. So right now, people want to get into short, but there is no fresh piece of negative sentiment or fundamental data for traders to do so. So now people just sitting on the sideline. Then you might say, but there's a lot of positive news actually, and positive data coming out from British pound. But that's precisely why you can tell the selling power is very strong. Because if a currency does not go up, no matter how strong the sentiment or fundamental data they have, then there's only one direction they can go, which is go down. Now, that's not the case right now. It's because we need a trigger, basically. That's what we're waiting for, a trigger to push British pound down. Now, if I remember correctly, next meeting is very soon. I think it's next week. Then we'll see what happens. That might be our trigger. And right now, people are sitting on the sideline. Actually, let's see if next meeting is coming out soon. Right here. So next week, let's see. Okay. All right, it's not next week. Oh, it is next week. Okay. So monetary policy and bank rate is coming out next week, next Thursday. So that's another reason, people are sitting on the sideline just trying to do. Actually, next week we have a lot of rate decision coming up. We have cash rate from Australia, policy rate from Japan, and we have the fund rate from FOMC, Federal Reserve from US, and then we have another rate from Bank of England. So, quite a wild market next week. And also non-farm payroll. All right, so looking forward for next week. And then that's always the thing, you have a very quiet week and you have a wild, excited week next week. But anyway, let's finish our analysis for today. Swiss franc and Japanese yen. Again, nothing significant happening. Dollar Swiss, like I said yesterday, you see, a lot of people say, oh, wow, if you trade purely with technical, you will get excited with this kind of candlestick. You'll say, oh, yeah, let's get shorted. But the thing is, you got to look at the fundamental side. Why would you short US dollar against Swiss franc? Was there any fundamental reason? Was there any sentimental reason? If there's no reason, you just get in with a pure price action. Now, you can do that, certainly, but you don't want to do that with a long-term time frame, because the more exposed you are in the market, the better probability, better odds you want to be in your side. That means you want to have not only the price action, not only the technical analysis. You want the fundamental data and the sentimental data to be on your side for you to take this kind of daily trade. And then this is what happened. You actually get filled, but it goes back again. So now, back then, this is where I get worried, because I'm actually touch a support and reflect it back, right? So right now it's looking to keep going up basically, and now I'm stuck in this trade. So just to give you a sort of example that why it is really good for you to line up all the analysis together, because a lot of people are arguing like, oh, you should just trade with technical analysis, you should just trade with price action, or you should just trade with this and that. For me, I don't think it's just one way or another. It's not black and white. If you want to ask me, of course I want to trade with every possible data or information that's gonna help me to make a better judgment. Why would I want to exclude it, any single piece of data? For me as a trader, I'm gonna open my eyes, open my ears, and the more data and information I have, the better decision I will make if all things are equal, right? Aussie Swiss, again, another reverse signal from Australian dollar. Again, not looking to short at all, but just to let you know that, the short-term price action, and same as Aussie dollar, we have this short-term price action to reverse. Aussie CAD, just keep going up. As I say, if you're a breakout trader, looking for, and the good thing about Aussie and CAD is that they both are commodity currency, so they both are pretty hedged out in terms of risk sentiment, and same as Aussie Newsy. Those are some of the good thing when you are going to two commodity currencies, is that you are basically taking out the risk of risk sentiment, because you are basically trading in the same category. So today, of course, you see another, basically all the Australian pair is the same result. All this large buying power came out from last Asian session, a positive number of CPI data, and then it goes down because profit taking, because risk of sentiment, because any other reason. But am I looking to short? Absolutely not, because I don't have any fundamental or sentimental data for me to get in. CAD Swiss, same thing, nothing really significant for me. And New Zealand Swiss, again, nothing much. New Zealand dollar, New Zealand CAD, and finally New Zealand yen. So that's it, guys. Again, like I say, this week is quiet, but don't be surprised, because next week is the wild market. So that's always, the case. This is not like a 9 to 5 job where you do you do the same thing with same amount of energy every day. No, trading is exactly like what you see right now. You have days of weeks of non-events. You have days of weeks of nothing, but you still have to be there, because that is a discipline of a trader. And then you have the whole week of tradable events that's really gonna be a wild market, but you still have to be patient and calm. So a lot of people get into the market and they get bored easily when there's no event, so they start placing trade for no reason. It's what I call a low conviction trade. And then when you have an excited market, they get scared and they don't trade. So that's not a good way to trade. You really want to, be very congruent with your energy, be very disciplined with your pattern, with your analysis. Be in front of the market every day, because you don't know when the opportunity is going to show up. So again, like I said, next week it was very tradable week ever since inflation report hearing. This is a good data to trade. CPI, this is okay. Core CPI, this is fine. The report, it's tentative, right? So maybe not that good. But moving on, you have a cash rate from Australian dollar. Of course, I'm gonna be here to wait for any surprise. If nothing happens, I don't do anything. Same as BOJ policy rate, monetary policy statement. BOJ press conference. This is all very good. Manufacturer PMI, GDP month to month. This is all tradable data. Manufacturer PMI, GDP price index, unemployment rate, employment change. This is all good. Building approval. This is any piece of data. If there's a deviation, it's tradable for you. Fund rate, FOMC statement. This is all good. And of course, this was the highlight. I think will be the Bank of England, because most likely every other bank rate will be on hold, right? I don't think Australian RBA will cut rate, but the statement might be dovish or hawkish. Same as BOJ, the statement might be hawkish or dovish. But Bank of England, you really might see some surprise thing coming out. But other than that, I'm just saying that it's at least comparable. And of course, Friday non-farm payroll is again another exciting the data to trade. But in comparison, this week, of course, it will feel like kind of boring. But that's just the nature of trading. So tomorrow, Thursday, we have preliminary GDP. Well, this is a tradable event. So today I will trade this event. And let me give you the number. Now, again, I'm only looking to short. Okay, so right now, market is waiting for any piece of negative information to short British pound. So for preliminary GDP is important because it is the first GDP data that's gonna come out, if I remember correctly. Preliminary second, yeah. So preliminary is the first one for Britain. We are looking at. Sorry, give me 1 second. 27. So quarter to quarter, the expected number is 0.3. If you have anything that's above 0.5, that's a positive number, but we are not looking forward for that. If you have anything that's below 0, okay, this is important. If you have a number that comes out below 0, that's a negative surprise that you can short British pound. Now, which pair you're gonna go pair with? Well, pair with dollar, because that's the most tradable events. And also fundamentally and sentimentally, you have a more strength into US dollar. So short cable if you have a negative number that's below 0. Other than that, core durable goods and unemployment claim is not tradable for me. So this is the only event I will trade for later on the session. And Friday, advanced GDP from US is another good event to trade, but just understand all this will be day trade. Okay, all this will be day trade. The only thing, because the rate decision is coming out so close, so I know also we are tomorrow and the day after tomorrow, that will be a weekend. So I don't want to get into any position right now. I don't want to get locked into it, right? So because even if the preliminary GDP is negative, but if next week any positive comment from BOE will actually support the British pound. So, and the election is coming out. So it's just so many unvariable things. So I don't want to hold any position. It will most likely all be day trade if I'm in any British pound trade or dollar trade. So just to give you a heads up, I'm only going to do day trade for this preliminary GDP and maybe advanced GDP tomorrow. And that's it, guys. If you have any question, again, feel free to comment or let me know. And I know there's nothing much to talk about it, but that's just the nature of market. And if I do have a day trade tomorrow, then I will tell you more about it. Okay. All right. Thank you. Happy trading. Play safe. See you tomorrow. Bye bye.